Good day, everyone, and I'm Gangster Trader. On today's topic, we're going to be talking about basic chart patterns or chart readings. So, in our early days when we were still learning how to trade, we'll go onto YouTube and search for chart patterns. We'd see different results of chart patterns, and I'm very sure that when I said we're going to be talking about chart patterns, you thought that I was referring to traditional chart patterns like head and shoulders, inverted head and shoulders, double tops, double bottoms, triple top, triple bottoms, falling wedges, diamond patterns. We have bordering triangle, symmetrical triangle, rectangle, flag patterns, pennants. In my early days, I used to feel like if I didn't know these things, I would not make substantial money in the market. But all these things are just garbage, right? And that is why I've taken it upon myself to correctly teach these things. Those chart patterns I mentioned earlier would only put you in, would only make you have more losses, right? So the only chart patterns I want you guys to recognize as forex traders basically is this on the screen, which is the downtrend pattern and the uptrend pattern, which we have here. So basically, when we go to trends, when we go to types of trends, there are basically three types of market trend, which is the downtrend here and the uptrend and the sideways markets or the ranging markets where market moves from bottom to top, equal highs and equal lows. So in this scenario now, the first example here we have a downtrend or a downtrend pattern. I want you guys to get accustomed to this, right? So in a downtrend consists of series of lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, like that, like that, like that, right? So why do I call this part a lower high and why do I call this part a lower low? Because this high is higher than this high, right? And this low is and this low is lower than this one. So it's when you see these bottoms like this, they are usually lower lows like that, lower lows, right? Those points, lower lows, like that. All these points. Conversely, the tops are usually referred to as the lower highs, lower highs, lower highs, right? And this, if you understand this, it's going to basically help you identify where the market is, trending at that point in the market. So we have an uptrend. It's quite the opposite in an uptrend. An uptrend, involves a series of higher highs and higher lows, higher highs and higher lows, higher highs, higher lows, higher high, higher lows, right? So it's quite different in an uptrend. Basically, another way to identify an uptrend, you can equally take a tool here and connect all of these bottoms together. This is the best way to identify an uptrend when there are several touches like this, indicating that price is moving more to the upside, more and more to the upside, right? More and more to the upside. Right. So why do we call this part a higher high? Why do we call it a higher low and higher low, or a higher low rather? Why do we call it a higher high? Why is it related to us a higher low? Is because this high, or say this high is higher than this high, this high is higher than this high and high is higher than this high. So it's a higher high. This high is higher than this high. And what we mean by a higher low, this higher low is higher than this one. This higher low is higher than this one. Higher low is higher than this one. That is what's the higher low. Now we're now familiar with the two kinds of you know chart pattern. Because for me, this is the chart pattern. This is the best way to identify where price or where the directional bias in the market is at the point here. So there are times when price would be ranging like this, and all of a sudden it will just change its direction from the upside like this. It will just change direction from this downtrend to up to an uptrend. So basically, you see a price break this previous lower high here like this. When price breaks it, we can it's safe to see we are on a new trend of an uptrend. Like this price will start, continuing with series of higher highs and higher lows, higher highs and higher lows, just like we had here. So let's just take us to the charts. So this is a scenario where price went from a downtrend, which is here, to an uptrend, which is here. These are the daily chart patterns you should get accustomed with, because when you get familiar with this kind of chart patterns, you will know where to position yourself in the market, right? So for this kind of pattern that has this series of lower highs, lower low, lower highs, lower highs, you're always going to know that yes, when you're in a downtrend, the only thing on your mind is to sell. And we're going to wrap it about that topic in the next video section. But when you're in a downtrend, you should know that at every high in the at every lower high in the market, you want to be targeting sales. That's why I told you that the other chart patterns doesn't really matter. They're just noise that people, just teach. It's not really necessary. These are the only things that you need to know, right? So when you are able to recognize this kind of pattern in the market, you will know that yes, you should be targeting these highs. And when you target these highs, you're targeting these highs that you want to sell. So at this point, comes down, market retraces to the upside. You see at this point you sell, market falls again, retraces to the upside. At this point again, at this lower high you sell, like that. Conversely, it happens here. So this chart pattern is a scenario where price went from an uptrend like this, to a downtrend. I mentioned something to a downtrend, which is this from here like this. I mentioned something earlier, how to, if price wants to, shift or change its character, either from an upside trend to a downside trend, price would have to first break the recent. So in this scenario now, this is the recent higher low. So price would have to break the recent higher low first before we can confirm that market wants to shift to the downside. But if we don't break this higher low, then we are still in an uptrend, right? That means we're still in an uptrend, right? The same goes for this scenario here. If we do not break the previous lower high here, you observe how price went and broke above this level. If we do not break above this level, that means we are still in a downtrend, right? Even if price comes here like this comes here like this and falls and break this level here like this and breaks this level, we're still in a downtrend. So these are the only chart patterns you should get accustomed with. In conclusion, you want to get accustomed to the downtrend, which consists of series of lower high, which consists of the series of lower highs and lower lows, lower highs and lower lows, as we have on the screen here. Lower highs, lower lows. Conversely, you want to get accustomed to the other type of chart pattern in the market that consists of series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Right. So this is the end of this section. On our next section, we're talking about introduction to technical analysis. Right. Introduction to technical analysis. It's almost related to what I've just done here, but it's going to be a little more technical, right? So until then, see you guys in the next section.